Welcome to today's episode of Technical Analysis, Exposing the Chart. Yes, that's what we do in this channel. And I bet you stay to the end of this video and you're going to learn these simple things I've dropped or written on this board and how you can make use of them when you come across them on the chart. And when you are watching this video and learning, don't forget to like, share, and subscribe. And equally share to your friends so that they can actually get the knowledge we are about to get for free. All right, today we'll be talking about POIs, or rather entry. We'll be talking about POIs and entry. And number one in our POI list, this POI is the full meaning. We can actually call it point of interest. These are those levels or those things you find on your chart that you can actually make use of when you want to enter the market. Those things that serve as an entry mode for you to take any trade when you're entering the market. And number one, we'll be taking order block. Order block. That's the very first thing we'll be discussing on entries. Order block is a very good entry mode that you can actually use to enter a market whenever you are done making your analysis and then you're looking for a zone between your area of value, or rather your area of interest, that is your AOV or your AOI. Within that range, you're going to be looking for something order block, or probably a tradable order block you can make use of to enter the market. And here I illustrated some how order block are being formed. Now take a look at this. We have two different types of order block. We have the bearish order block and we have the bullish order block, just as I illustrated it on the board. Take a look at this. A bearish order block is actually a bullish candle that is being invalidated by a bearish engulfing candle. That is, don't mind me, this black is meant to be green. So let's assume that this is a green candle and then this is a red candle. Is engulfing the green one. Now this formation here, that is what is known as a bearish order block. The reason why it is called a bearish order block is that they give it name based on the particular candle that is engulfing the other. Now, as the red candle, the bearish candle is engulfing the green candle, it is called the bearish order block. Why? Because it can only be used to enter a bear market, or it can only be used to enter a short market when you want to sell. That is why it is called a bearish order block. Whereas a bullish order block is a little or a kind of a bearish candle being invalidated by a bullish engulfing candle. It can be any kind of candle, it can be a Harami pattern or any stuff, but provided it is a bearish candle that is being invalidated by a bullish candle, then it is said to be a bullish order block. And it can actually be used for a long entry or a buy entry. Now, let's say this is a bearish order block, and how can you trade this? When you locate this order block, probably the market should be going somewhere this way, and probably you take here to be your entry. That's how you mark it. You mark starting from the beginning of that bullish candle to the ending of the bullish candle. Mark it out this way so that when market comes back to it, it picks and then you sell. The same thing with your bullish candle. Let's say the market is going towards this way. Now you mark your order block this way. And when the market comes back to it, it picks your entry and then you move. That is exactly how to mark out your order block. And we're going to be going to the chart in order to identify these order blocks and how you can trade them. Mind you, order blocks are plenty. There are a lot of them in the market, but your ability to identify which of them that is tradable and which of them you're going to use, it's still another kind of skills, of which we'll be talking about that in our next video. We'll be talking about tradable order blocks and non-tradable order blocks. Order blocks are almost everywhere because probably it is majorly where order went into the market. But then orders can differ. There can be little orders that can actually move the market when market comes back to that particular zone, and there is still orders that are not able to hold the market when market comes back to that particular zone. So that is where tradable order blocks comes in, where you actually know the particular order block that there is a lot of order situated at that particular zone, and that particular order block, it's said to be a tradable order block because there is a high tendency that it is going to bounce back the market when market comes back to that particular zone. That is that for that. Then number two, we have breaker block. Don't forget, we will still be going on our chart to identify order blocks and equally breaker blocks and equally inducement. If time permits us, I will try as much as possible to make this video very short so that you won't have to waste a lot of time on this video. Now we have breaker block. Listen carefully. This breaker block is somehow tricky, but then I will explain it better. Breaker block is actually, let's say we have two as well, the bearish and the bullish breaker block. Now, this is a bearish order block, but then in this case, we'll be calling this a bearish breaker block. If you watch where you see that this is a bullish order block, but then its formation, we are giving it a bearish order block. In this case, it is an order block that is being invalidated, a full order block formation that is being invalidated by one particular big candle or two particular big candle, creating a fair value gap there. Now, when a particular order block is being validated, let's say a bearish order block was invalidated, then that order block turns to be a breaker block because it didn't hold when market actually came to it. Instead, it was taken out. So it can actually act as a breaker block inversely. The same thing here. The bullish breaker block is actually a bearish order block that was invalidated, and then it can actually turn to a bullish breaker block. Now, let's explain with this drawing. This is a bullish order block. Now, as let's say we made the market around here. The market was meant to come down to this zone, take the zone, and keep going off. But instead, the market invalidated the whole zone with a very big candle and went downwards. Now, this order block did not hold. Coming back to that particular zone again, let's say the market wants to come back to that particular zone again. This bullish order block will now serve as a sell entry. Remember, bullish order block is always serving as a buy entry, but in this case, because it was invalidated, it can now serve as a sell entry because this is what broke this order block. That is why it is called breaker block. This is the breaker block here, breaking out a bullish order block, and then coming back to this market, you can use here for your entry. And when market gets here, it will sell. You can now use it for your sell entry. Remember, it's a bullish block, but it can be used for a sell because it was broken by a very huge breaker block, bearish breaker block. Same thing here in the bullish breaker block. It is actually a bearish order block here. Watch here. It is actually a bearish order block here that was supposed to use and enter a short trade when the market gets to it around here to enter a short trade. But then it was taken out by a very huge bull candle, which is the breaker block here. This breaking out the order block. So the order block couldn't hold. And then when next market comes back to it, because it's actually changed character, when next market comes back to it here, it can now be used as a buy entry. Remember, it's a bearish order block, but it can be used as a buy entry because it was broken, or it was broken by a bullish block. So that is that for bearish, bullish order blocks, bearish breaker block, and bullish breaker block. Now, mind you, you don't just take trade or say you're going to the market to go and take trades from any other blocks. All other blocks are not tradable. It's not every other block you see in the market that is tradable. Some can just appear anywhere, but there are criteria you need to check or see, confluences you need to consider before you decide on a particular order block that is clearly tradable before you can take it. We'll be talking about that in our next video. But then, for now, let's move over to our chart to identify this so that you master it first. Then on the next video, you can learn how you can identify both the tradable order block and the tradable breaker block in a well position. Like I said, it must have to align in your area of value or the area of interest before it can be considered tradable order block or tradable breaker block. Now, let's head over to our chart to identify this both bearish order block, bullish order block, and all this on our chart. All right, let's take a look at it on the chart. We're going to be identifying order blocks and equally breaker blocks on this chart. So whenever you see it, you can identify it. Remember, I said it's a combination of order block. It's a combination of a candlestick pattern that where either if it's a bullish order block where the bullish candle invalidates the bearish candle, but if it's a bearish order block where the bearish candle invalidates a bullish order block, whereas in breaker block it is vice versa. Now let's take a look at it. Let's identify order block using my rectangle. This is a bullish order block. This is a bullish order block here. And how are you going to draw it? When you want to draw it, I normally draw my own from the neck here. I normally draw my own from the neck of the candlestick here, but normally you are meant to draw from the beginning of the wick, the beginning of the candle wick here, to wherever the candle wick stops. Remember, let me redraw. Remember what you are drawing. This is a bullish order block now. This is a bullish order block now. This is a bullish order block. Remember what you are drawing. You are capturing the bearish block there that was invalidated by a bullish engulfing bar. You are capturing the bearish block there that was invalidated. The one that was invalidated is the one you are dealing with, but the one that invalidates is the one that is making you understand that this is a bearish or a bullish. So we'll be capturing the one that was invalidated, which is this, starting from where the wick starts to where the wick ends. To where the wick ends, you extend. Now this is an example of a bullish order block. Let's label. Let me see if I can label it. Let's label. This is a bullish OB. This is a bullish OB. That is it. Now let's look for a bearish OB. Now you understand the concept of the order block formation. Let's look for a bearish OB. Here, this is an example of a bearish OB. This order block here. This order block here. You can see a bullish candle being invalidated by a bearish engulfing bar. That is exactly what I mean by order block, just like I explained on the board. Now let's mark the bearish out. Starting from the beginning of the week, move down to where the wick stops downwards. That is for bearish order block. Let's equally label this. Let's label this to be bearish OB. Bearish OB. So that's that for bullish and bearish order block. And I know by now, if you can identify this on chart, then you are good to go. There are many other blocks on the chart, like you can see. Okay, let me be drawing the one after the other. There are many. This is another block here. This is another block, this small other block here, which finally turned to a breaker block. I will show you people how. Don't worry, we are in the video together. I will show you people how. And I'll have to locate a bearish order block that actually turned to a bullish breaker block. This one equally turned to a bearish breaker block. We'll explain. That's another block there, but let's finish with other block first. This is also another block here. This is also another block here. So there are a lot of them. There are a lot of them in this market. There are a lot of OBs. This is another block. This is another block here. This is another block. I following. This is another block. There are a lot of them. There are a lot of them. If you search for more, this is a bearish order block here. This is a bearish order block here. There are a lot of them in the market. So the sooner you watch this video to the end and learn it, the better you can understand what order block is all about and how you can trade it. Now, how can you trade this order block? Remember I said you should not trade in isolation. Don't trade in isolation. Make sure that you are done with your analysis. Order block and breaker blocks are majorly for entries. When you are done confirming your confluences, probably if you're an SMC trader, you are done confirming your change of character, your break of structure, you've identified your market structure, you've equally identify where fair value gap happened, imbalance and liquidity on the chart. Now you identify your area of value or area of interest. You now look for order block around there. We will discuss that on our next video, where we'll be talking about how or how to identify a tradable order block, or which of the order block is tradable and the ones that are not tradable. Like I'm marking other blocks here on the chart now, but many of them are not tradable. Let's take for instance, this other block is not tradable. This other block is not tradable. If I had marked this other block when the market is around here, when the market is around here now, let's say the market is around here now, and I want to use the other block of my entry for the market to come and bounce on it here and bounce off. Did you see that it did not work? The market, instead the market came for it. Instead the market came for it and took it out. The market came for it and took it out, and you are on your SL. That is the more reason why I tell you people that all other blocks are not tradable. So you need to identify which and which is tradable. Now let's identify breaker block on this chart. Now this is example of a breaker block. This is an example of a breaker block. This is an example of a breaker block. Are you following? That's an example of a breaker block. It is an order block. This is a bullish order block that was invalidated. Normally, you are meant to mark it out this way. You are meant to mark it out this way. But then, it was invalidated by this huge candle here. By this huge candle. It was invalidated by this huge candle downwards. Are you following? It was invalidated by this huge candle downward, which appeared to be the breaker block. This block now, this candle, this engulfing bearish engulfing bar becomes the breaker block here. And what happens? Remember I said since it's a bullish order block, but it has been broken by a breaker block, on return it can now serve as a bearish entry, no longer a bullish entry. And let's see if it served as a bearish entry. Yes, it did. Look at this place. It did. So after the market took out the other block from here, after the market took out the other block from here, the market had to return, take in the other block here and sold, even though it is not a strong one. Just like I said, it is not situated at a very good area, so it wasn't a very strong one, but then it equally acted the little and pushed a little move and percentage that it can. Now that is a bearish breaker block. Now let's look at know if we can find a bullish breaker block. Let's take this for instance. Let's take here for instance, I'll have to identify a bullish breaker block. I'll have to identify one. Well, I'll have to find one. Just exercise a little patience. I'll have to find one. Let me show you people exactly how it worked. Let me minimize this. Okay, I've seen one. Let's delete this. Now look at this particular point. This is a bearish order block that was supposed to be used for a bearish entry here, right? This order block was supposed to be used for a bearish entry, but then the market, instead of coming here to bounce on the other block and going down, instead it continued going up. It took out the market with this big candle here, with this big breaker block here, this particular big breaker block here, this particular big breaker block. That was what took it out. And then when it took it out, it now turned to be a bullish breaker block, where the market came to it here. The market came to it here, bounce off, and it's almost acting as a pullback from here, an entry from at this point, almost acting as an entry upwards. Here, it equally acted as an entry here, even though it didn't trigger here. This is an inducement, which we'll talk about on our next video. And so a broken order block can actually turn to an inverse breaker block, just like I said earlier. And that is that, and how you can identify breaker block on your chart and other block too on your chart. But mind you, all other block is not what you trade. You don't trade all other block. I repeat, you don't trade all other block. There are tradable other block and there are non-tradable other block. Let's see that on our next video. We have come to the end of this video. You can like, comment, and share, and equally stay tuned. Search for my channel maybe next week for this particular continuation of this video about a tradable order block and a non-tradable order block. And at the end of the day, you'll feel thankful for coming to this channel. Shalom.